Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the global markets displayed a volatile session as the US consumer inflation data still holds around its record annual gain of 8.5% posted back in March. This the largest increase around 40 years. From the print, the annual pace of headline inflation in the US, according to the Consumer Price Index, or the CPI, fell to 8.3 in April from 8.5 in March, according to the latest release from the Bureau of Labor Statistics. That was above the expected decline to 8.1, with the month-on-month pace of headline inflation fell to 0.3 in April from 1.2 in March, also above the expected drop to 0.2. From that, the dollar index, which measures the greenback strength against a basket of 6 major currencies, has edged back up to its 20-year highs around 104. Viewing the Australian dollar, the market was very whipsawed overnight, and as you can see, the rise eventually reached its objective, which was at 70.55. From there, the market plunged and now back towards the bottom side of the range, which sees the base around 68, 70, 80. In light of the pattern, there is still divergence, and therefore I feel the market may actually once again rebound from this bottom side of the range and again look towards that top side 70.5 and reassess from there. Euro was relatively quiet overnight considering the CPI number. Nevertheless, the market still maintains above the 104.85.95. In light of the pattern, I still feel there is potential to see a further increase to the upside, and if so, could see a rise up towards the region of 105.70 with the 106 to 107 objective still holding. Now, with that being said, failing to hold to that call, a break of 104.85 would be devastating for the bulls, as I feel the market may drop suddenly towards the region of 103.40.60 and reassess from there. The dollar yen seems to be coasting sideways as it holds above the support level seen around 129.30.40. Nevertheless, the technicals are still heavy, and I still feel the market will take that challenge towards that bottom side of the range around 129.30.40. And do note, if we see a break, I see little support until around 127.45, with the caps still holding around that 131.50. Still disappointing price action for sterling overnight as the market backs away from that top side of the range of 123.90. With the divergence from the RSI slightly buckled, but the MACD is holding, could still see a rebound. That is from the support region that now looks from around 122.15 minor and 121.70.75 as a potential base. If the MACD can support the bullish divergence, then I do anticipate another retest of that top side level that was rejected last night of 123.90. A little bit whipsawed for sterling Kiwi as well. The market rejects that top side 195 and plummeted to a low seen around 193. In light of the pattern, it's still somewhat negative, and therefore I feel we could see another down test at 193 or even back towards the base, what was rejected last week at 191. Gold attempted to recover overnight, but found resistance off the break level around 1,852 to 58. The technicals are still holding in negative territory and therefore could see another down test. If we see a move through 1,840, then that would give us further indication to a target of 1,820. And finishing up with oil, after reaching its target of $97 a barrel, we've posted an outside range day. I feel the market may actually attempt to climb higher and therefore looks towards the 106.50 level, which I shall bring it down to about here, and then maybe see another down test back to $97 a barrel. Well, that wraps it for the morning. Thank you very much for joining me. And as always, keep an eye out for the intraday report and also the end of the day wrap.